Okay, let's dive into this. Welcome to today's Explainer, where we're going to unpack a topic that honestly stresses out way too many people, but really, it shouldn't. We're talking about realistic wealth building. Today, we're breaking down the 6 golden rules for financial freedom. And don't worry, there's absolutely zero confusing jargon here and no high-stress trading. We're just looking at timeless, everyday habits that literally anyone can use.
So here's the big question. Is investing actually complicated? A lot of us start out with this beginner assumption that investing is just this chaotic, highly complex gamble. It feels a bit like trying to navigate a crowded casino blindfolded while people are just yelling random numbers at you. But the reality? It's actually quite the opposite. True wealth building relies on a few incredibly mundane, everyday principles that we honestly just tend to forget to follow.
To show you exactly what I mean, here is our quick roadmap for the Explainer. First, we'll bust the false myth of investing. And then we'll check out the superpower of time. After that, we'll see why your habits need to be like brushing your teeth, how to protect your money, and why you really need to think outside the herd. Finally, we'll ask, what is your obstacle? So rest assured, we are going to break all these fundamental habits down into a super easy-to-digest routine.
All right, first up, Section 1, the false myth of investing. The core problem we face here isn't that the market is just too hard to understand, it's actually that people forget the basic principles and end up making investing far, far more complicated than it ever needs to be. We let our emotions get into driver's seat and turn a totally simple process into a deeply stressful one.
Moving right along to Section 2, the superpower of time. So the crucial point is, if you really want to succeed, you absolutely need to establish this first timeless habit as early in your life as possible. Because time is the one asset you can literally never buy back. And when it comes to investing, time is simply everything.
And why exactly is time so important? Well, because of compound interest. This is, without a doubt, an investor's absolute biggest superpower. Think of it exactly like a tiny snowball rolling down a really long, snowy hill. Your initial investments start generating their own little returns, right? And then those returns get packed right back into the snowball, generating even more returns over time. It just grows and grows and grows. And the best part is, you aren't doing any extra heavy lifting.
Let's look at a super practical example of this snowball effect in action. Just imagine someone starting to invest only $100 a month at age 20. Now contrast that with someone who waits just 5 short years to start, at age 25 with that exact same amount. We're talking about $100 a month here. That's basically just the cost of a couple of takeout dinners.
$177,000. Just let that sink in for a second. That is the massive, life-changing difference in your portfolio at retirement age simply because you started at 20 instead of 25. It's wild. And here is a really surprising fact to keep in your back pocket. Historically speaking, every single dollar you invest at age 20 can turn into $21 by the time you hit 65. That right there is exactly why starting early is rule number 1.
And that perfectly brings us to Section 3, habits, like brushing your teeth. So now we're transitioning from the hard math of investing to the daily behavior of investing. And honestly, the whole shebang boils down to just 2 things, consistency and automation. You absolutely do not have to be a financial genius, you just have to be incredibly routine.
The quote here says it best. Investing must become an automatic habit like brushing your teeth. Now, what's really interesting about this brilliant little everyday analogy is how it completely grounds the entire concept of wealth building. Think about it. You don't wake up every morning and agonize over whether or not you should brush your teeth today, right? You definitely don't try to time the optimal brushing window. You just do it. It's totally automatic.
So how do we actually make investing like brushing our teeth? Well, it's just 3 easy steps. Step 1, set up automatic withdrawals directly from your bank account. Step 2, use that money to automatically buy broad index funds. And step 3, literally don't think about it anymore. Seriously, by automating the entire process, even a seemingly tiny amount like $50 or $100 a week can realistically transform into millions over the long haul. Why? Because you are completely removing human emotion and hesitation from the equation. All right, moving on to Section 4, protect your money. Building wealth really isn't just about playing offense, it is heavily about defense. We need to talk about the essential guardrails of investing, specifically how we handle market timing and our short-term capital. There's this classic saying in finance, and it is entirely true. Time in the market beats timing the market. Trying to predict the market's weather by guessing exactly when it's going to hit a high or a low, yeah, that's a losing strategy for most beginners. I mean, you wouldn't run outside and try to dodge individual raindrops in a massive thunderstorm, right? Now, you'd just grab an umbrella and wait it out. It's the exact same concept here.
And hey, if you don't believe me, just look at the shocking historical data. Imagine a portfolio that stayed fully invested 100% of the time over a 20-year period. Now, compare that to an investor who tried to be clever and timed the market, and by doing so, they missed just the 10 best market days over those entire 2 decades. Missing just 10 days out of over 7,000 actually halves your annualized returns. Halves them! Jumping in and out of the market literally destroys your wealth. The lesson? Just stay seated.
Now, another major way to protect your money is knowing exactly where to park it based on your time frame. There's a very strict contrast between short-term safe harbors and long-term growth oceans. For example, if your goal is in the next 1 to 3 years, say you need a house down payment, or you have a big tax bill coming up, keep that cash completely out of the stock market. Use safe deposit accounts or government bonds instead. The ironclad rule here is never, ever invest money you are going to need for immediate, short-term expenses. You should only commit funds to the market that you can leave completely untouched for 10 to 20 years to see that true compounding growth.
Let's move to Section 5. Think outside the herd and see how this builds on everything else. So you've got the math down, you've got the habits locked in, but now you need independent thinking.
Before you invest your hard-earned money in literally anything, whether that's a stock, a fund, real estate, whatever, you absolutely must be able to answer 3 simple questions. Step 1. How does it actually generate profit? Step 2. How long do I actually plan to hold on to it? And step 3, how much volatility, those wild, scary price swings, can I emotionally and financially handle? Listen, if you cannot clearly answer all 3 of those questions, just stay out. Never invest in things you don't understand just because some guy on the internet or your buddy told you to.
And this brilliantly illustrates the ultimate battle between the herd and independent research. You see, following the herd basically means relying on random advice, chasing the crowd just because a price is suddenly shooting up to the moon, and then panic selling the second you see an alarmist news headline. It's honestly like buying a used car without even checking under the hood just because your neighbor bought one. Independent research, on the other hand, relies on hard facts, your very own analysis, and trusting your instinct. Now, thinking independently is a really tough habit to build, especially when everyone around you is either panicking or celebrating. But it is for sure undeniably the most profitable habit you could ever possess.
And finally, we arrive at Section 6. What is your obstacle? Let's go ahead and wrap up this everyday routine framework.
So, as we close out today's explainer, I want you to really think about the everyday routine we just built together. Starting early, harnessing the magic of compound interest, treating your investments like brushing your teeth, and automating those habits. Staying seated in the market, protecting your cash, and completely ignoring the herd. I want you to honestly reflect right now. Which of these habits do you find the hardest to follow today? Is it trusting that long-term process? Is it turning off the news and ignoring the noise? Whatever it is, identify your biggest obstacle right now, today, and let conquering that specific obstacle be your very next step towards your own financial freedom.